Hi everyone, my name is Helena. I am a director at the AASB and I am joined here by my colleague Lan. This is session number 3 in our webcast series on the ITC 56 consultation document. In section 2 of the ITC, we consider potential effects of the new presentation and classification requirements introduced by AASB 18. In today's webcast, we will talk about why AASB 18 could affect our domestic Tier 2 standard. We will go through the main areas of change in AASB 18 and the proposals in the ITC. We will also cover briefly a forthcoming ED for public sector entities, and finally, we will look at the ITC questions. Lan, we know that from January 2027, AASB 18 will apply to Tier 1 entities. So why should it affect our Tier 2 disclosure standard?
Well, currently, Tier 2 entities present their financial statements in the same way as Tier 1 entities. After January 2027, this may change because AASB 18 will replace AASB 101. Let me explain on this slide. When we developed AASB 1060, we aligned Tier 2 presentation requirements with those for Tier 1, and we also included the mandatory presentation requirements from AASB 101 in AASB 1060. In webcast number 2, we talked about amending AASB 1060 due to the updates to IFRS for SMEs. But the IASB didn't consider IFRS 18's impact on SMEs, and it plans to do so in its next comprehensive review. This means after January 2027, Tier 1 entities will apply AASB 18 requirements, but Tier 2 presentation requirements will still be based on AASB 101. This is against the original principle of aligning presentation requirements for both tiers.
That's interesting. So can you walk us through the main changes that AASB 18 introduces?
Absolutely. AASB 18 introduces new presentation requirements for the income statement where items need to be classified into 5 categories. It also introduces additional disclosure requirements if an entity chooses to present operating expenses by function. AASB 18 requires additional disclosures for specified expenses in the notes. AASB 18 also introduces a new term, Management Defined Performance Measures, also known as MPMs, and along with it, a set of disclosure requirements. Additionally, AASB 18 has also enhanced the guidance for aggregation and disaggregation. This means entities will need to be more thoughtful about how they group or separate items in the financial statements. Finally, AASB 18 also made changes to the classification of certain items within the cash flow statement.
It sounds like quite a lot of changes. Can you give us some examples what the changes look like?
Yeah, so I've got an example here which shows the new classification and presentation requirements under AASB 18. The standard requires an entity to classify income and expenses into operating, investing, and financing category and present 2 mandatory subtotals in the income statement. I've also got another example which shows the reconciliation of MPMs required by AASB 18. The MPMs in this example are the adjusted operating profit and the adjusted profit from continuing operations. Under AASB 18, entities must reconcile the MPMs back to the financial statements and disclose the tax and NCI effect.
This is a great example. So I would like to ask our stakeholders to look at the slide and let us know whether this information is useful to users of Tier 2 financial statements. So Lan, what else do we need to know from our stakeholders?
Yes, so the first set of questions we're asking is to do with whether we should update AASB 1060 to align with Tier 1 presentation requirements, and if so, when? Should we do it now or wait until the IASB update the IFRS for SMEs first? So if it's now, we will need to think about how we do this. In the ITC, we have proposed 2 approaches. We could include the relevant requirements from AASB 18 in AASB 1060. This would increase the volume of AASB 1060 as there are a lot of paragraphs to replace. The other option is that we include in AASB 1060 the references to the relevant requirements in AASB 18. This would reduce the volume, but AASB 1060 would no longer be a one-stop shop standard. So, our question to you: how important is it to align presentation requirements for Tier 1 and Tier 2? And if you think it is important, which option do you prefer? The next set of ITC questions that we have focuses on additional disclosure requirements. Here, we want to hear your feedback on whether you think Tier 2 entities should apply all, some, or none of the AASB 18 requirements. All of the details are included in the ITC.
Thank you. At the beginning, we talked about a forthcoming ED for the not-for-profit public sector. Can you give us a quick overview of what that ED will propose?
Yes, the ED will propose some exemptions for Tier 1 not-for-profit public sector entities. These entities will continue with the existing presentation of the income statement and the cash flow statement. In addition, they may be exempt from disclosing MPM information. So, if you are a public sector entity, please keep an eye out for that ED. But in our ITC, we are asking whether Tier 2 public sector entities should get the same relief as Tier 1 entities. And we're also asking if the new AASB 18 requirements are suitable for Tier 2 not-for-profit private entities.
Thanks, Lan, for walking us through this topic. This concludes our third webcast on ITC 56. There's another webcast in which we will talk about IFRS 19, subsidiaries without public accountability. So if you are interested in that topic, please watch our webcast number 4. Our ITC is open for comment until 22nd January 2026. You can read the full document and register for one of our roundtable sessions either via the AASB website or through these QR codes. Thanks again for joining us, and we look forward to hearing from you.